We have a stable view on most banking systems in Asia Pacific, and what we particularly like about Asian banks and what gives them resilience is, strong capital, good quality of loan books, and most importantly, good funding and liquidity. So on that front, we expect that funding stability will be maintained by the majority of the rated institutions. What we particularly like is that most of their assets are financed by deposits, and most importantly, deposits are widely diversified by various business lines, right? Retail, corporate, and SME. So that gives us comfort that funding should remain sticky.
And you bring up a very important point here. Their deposits are invested and diversified, and unlike, let's say, SVB, they're not all stuck in treasuries, yes?
That's right. So the majority of deposits are actually invested in loans. If you look at the typical loan-to-deposit ratio in Asia, it's about 90%, right? So most deposits are invested in loans. Banks obviously do invest in government securities, local bonds, foreign bonds, but that share is not that significant.
As a banking kind of guy, are you surprised at what happened with SVB within the space of 48 short hours?
Well, I've seen a number of bank failures in my career, so I wasn't surprised that things can escalate so quickly. So deposit runs can be quite meaningful in an emerging market or a mature market like the U.S.
So in SVB, this was the bank to the stars of the future, right? Future U.S. tech, and to several names out here in Asia as well, right? But as a bank, though, they didn't seem to do a terribly good job, because Sri and I were talking earlier on this morning about how for 9 months these guys were sitting around and doing business, or trying to do business without a chief risk officer. How do you do that?
Well, risk management in any bank is not only about a CRO, right? It's a whole department. There's a lot of people who work there, right? And of course, it's unfortunate when sometimes you don't have a CRO. Maybe someone is stepping in their shoes. But again, a risk manager is not only about a CRO.
Okay, fair enough.
Eugene, the weak link in this region, China's property developers and their associated lenders, how would you characterize their credit profile at this juncture and debt and default risk?
Well, for Chinese banks, so since last year, we have a negative view on the Chinese banking system, right? And now, zooming into today, the economy is reopening, right? So that's going to be positive for the banks a bit. But we still see some adjustment for the individuals and corporates as they emerge from those lockdowns. So, and the property sectors are still lingering in the Chinese banking system. So we still have a negative view on the Chinese banks, but again, because of asset quality risk and profitability mainly.